Health insurance, let's work on that because that's the next important part. I hope we are good on time. Health insurance, Mediclaim, what options you have? You have individual policy and you have floater policy. Floater is wherein you have a family, spouse, children. So you say you buy 5 lakh of health insurance and that 5 lakh will be distributed among your family. So it's not for one individual. So one individual use 2 lakhs, remaining 3 lakhs are still there for the rest of the family to use in that particular year, and after 1 year completes, the whole 5 lakhs comes back. Senior citizen Mediclaim is a product which is specifically for senior citizens, because if you have not bought it during your young age, if you had somebody met me age 65, they want to buy a Mediclaim, the options are very limited. You have to end up paying little bit higher premium and little bit more restrictions in terms of what you call co-pays. That is something from your pocket. That is, if there is a hospital bill of 1 lakh, then maybe 30,000 you have to pay from your pocket, and the 70,000 the insurance company will pay. That's a co-pay, because that's a restriction they are putting on your policy at the beginning, saying that this policy comes with a 30% co-pay. It's a senior citizen product. You didn't buy it regular product during your young age, so now when you want to buy it, some restrictions will come. Critical illness will pay a fixed amount. If there is a specific critical illness, stroke, cancer, renal failure, you will get a fixed amount as long as you survive for 30 days or so. That's the condition. Top-up, super top-up. Super top-up is a better concept where it's a deductible. The first part of the amount you are paying either from your pocket or from some other insurance company, and the insurance company will pay the remaining part. That is, you take a policy of 5 lakh and say that you are okay about them only covering after the first 2 lakhs. That is, first 2 lakhs either you will pay from your pocket or some other policy will cover, and they will cover the next 3 lakhs. So the premium is low. So if you already have a policy of 2 lakhs, then instead of buying a new policy of 3 lakhs, you take a super top-up of 3 lakhs, because then your premium is little lower, and you are covered by the first policy for 2 lakhs, and the second policy will cover you for 3 lakhs. Top-up, option is there by multiple insurers, but I don't recommend top-up, because top-up is per treatment or per hospitalization instead of across over the year. So super top-up will add all the expenses throughout the year, and once it reaches a fixed amount of say 2 lakhs, it will start covering. But top-up will cover only for particular hospitalization. So if you have multiple hospitalization, they will say you have to cross 2 lakhs for each hospitalization, then only they will start. Every insurance company has their specific underwriting policy. Some are little strict, some are little... Portability is come, and you can apply to the new insurance company. Portability doesn't guarantee you the premium. So what it guarantees you is the waiving of waiting period of pre-existing diseases. Premium can be whatever the new insurance company decides. So you might be paying 5,000 today. If you try to port to some other company, they might charge you 8,000. So either you accept that 8,000 or you stick to your 5,000 with your existing company. So the premium, whatever they want to set, is still given to them. That is, they have a right to set whatever premium. So they might charge you premium which might be unaffordable and you might not want to shift. IRDA is making it a little strict. They are saying that for portability, if somebody wants to deny insurance company, they have to give some specific reason and file some details with IRDA why they are denying this particular person. So it's not, they are not saying you can't deny, you can still deny insurance company, but they're making it little bit stricter for the insurance company to deny. So they have to give some reasoning, proper reasoning to even regulator why they are rejecting a particular case. But again, it's not like they can't deny. I mean, it's their right to underwrite. Once they have taken you, then they will offer you the same sum insured. If the policy says lifelong renewal, they will offer you the same sum insured for the rest of your life, unless there was some fraud or anything. So once you get in, then you don't have to worry about not having the renewal. I mean, they will be forced to do the renewal till the policy ends, which now the trend is lifelong. So some policies today are only offering till 70, 75, 80. But the way forward is the draft regulation wants it lifelong. So that's a good thing once it comes through. And many products have come with lifelong renewal. So you might want to consider only a product which is a lifelong renewal. The only thing is the sum insured is another part where I'm going to talk about, where if you have say 1 lakh, many senior citizens I meet, they have only 1 lakh and the insurance company is not willing to give you another policy or increase your sum insured. They are saying that, why don't you make it 2 lakhs, 3 lakhs, insurance company is not. And that's where again the right to underwrite. They are going to continue with whatever insurance you took they're forced to do that, but then to increase the sum insured, they may not. Especially if there is a illness, if somebody we know somebody had a cancer and she's now cancer free, but ICICI Lombard wouldn't increase the sum insured, and no questions asked. You will only get the same sum insured, but they won't raise the sum insured. So you might want to consider a bigger sum insured to begin with. I mean, going for 1 lakh, 2 lakh today is quite low. So 5 lakh, 10 lakh is a good option. I would say still 5 lakhs you should have, because medical inflation, somebody has a heart attack, 3 to 5 lakhs is the expense. So 5 lakh you would want to have, because 10 years from now that 5 lakh will also look less, and you may not even be able to get 5 lakhs, because the insurance company will say you stick with whatever you have, we are not going to underwrite you more for that. So let's just go a little fast. Fine prints, that's where I'm just talking about. The 5 lakhs to 15 lakhs is a good cover, and lifelong renewal is a good option, but you need to get the policy. They may not increase the sum insured at a later age for senior citizens, and if you have some illness. Copay we talked about. Room rent limit, where you might say 1% of your sum insured. So if your sum insured is 3 lakhs, the room shouldn't be costing more than 3,000 rupees per day of stay in hospital. So if the room is costing you 5,000, you might think you will just pay for the extra room rent. That doesn't happen. Many times the whole bill will get prorated, because say you are eligible only for a room of 3,000 and you stay in a room of 6,000, you might have to pay 50% of the bill. Because what happens in India is, it's not just the room rent, the whole expenses of hospital changes. The doctor who comes to visit you, he will suddenly have a different rate if he is visiting a general ward patient compared to a single room patient. The whole operation theatre procedure cost can double very quickly if there is a room change. So insurance company fairly enough doesn't want to pay from their pocket if you are going to a bigger room and spending a lot of money. Fine prints, limits for surgery, senior citizen Mediclaim, you would have some limit wherein you might buy a policy of 5 lakhs and your surgery cost may be only 1.5 lakhs covered. So you might be paying a premium of 5 lakhs, but your heart surgery or whatever procedure cost, they'll cover you only for 1.5 lakhs. Pharma, you might have a limitation, like stent cost, maybe only 40% will be covered. So you have 1 lakh cover, you have 1 lakh bill for stent, only 40% will be covered. Pre-existing disease, again 4 years is the standard. Some might say 4 years of continuous coverage with no hospitalization, or 4 years of coverage with no hospitalization for that particular condition, then only will cover it. Little restrictive. So make sure it is very simple. After 4 years, they should cover. If they cover it after 4 years, should be happy, because standard is 4 years. There are now new products which are offering less than 4 years also, but very rare. There is a 2-year waiting period for specific things, cataract, hernia and other things, 4-year waiting period. So you need to be aware that you can't just buy a policy and go for a cataract and expect to be paid. They won't, because they want to make sure you wait for a certain period, because the policy will get misused. Outpatient procedures, don't go by the count, because some of the count, like Apollo has 140 or more than that, but then it's like they have eye surgery, specific surgery, then only they will cover. But if it is a generic one, that is eye surgery, like I think Oriental has, it will cover for a generic anything related to eye. If it is very specifically worded, then only those specific things will be covered. So just go by the broad definition of, and you need outpatient procedures to be covered, because kidney stone removal is now outpatient and you don't want to be paying for that. So you want to make sure your policy covers as many outpatient procedures and broader definition. Timelines, be very clear that insurance companies are getting very strict, wherein some of the companies are saying you have to inform us within 24 hours of hospitalization, or some might say 48 hours of hospitalization. If you don't inform them, if you just file a claim after 7 days or 10 days, they will say you will not pay the claim, because you never told us you were in hospital. They want to do it because they want to say we might visit the hospital, see if you're really there, talk with the doctor and see if this patient is really not a fake patient, and to put a false claim. So they're doing it for their purpose, but you have to be aware of these timelines and do all the filings, that is intimate the TPA beforehand within the time limit. Renewal, just make sure what are the terms and conditions which are getting changed, and if you're not happy with the change condition, then you can use portability. Claims loading, you might see a hike in premium. Some companies are having 200% loading, so you have somebody had a heart surgery and their premium increased from 16,000 to 48,000, so 200. So in a way, policy which is having a claims loading which is very restrictive is bad. If it is claims loading which there's no claims loading, then that's good policy.